Oh boy, it's the Federal Reserve week. The Federal Reserve is going to come out this week and tell us exactly what they're going to do. Hey guys, my name is Dan Frio. I do the market update every day to inform you guys everything real estate, especially the financing piece of the puzzle. But this week, I don't care if you're buying a house, buying a car, but you need furniture, you need a personal loan, the cost of everything is going to go up. Why? Well, the Federal Reserve's meeting this week, and we know that they're going to raise rates at least 0.75%. So based on that, well, first off, let's look at the economic calendar to see what's taking place other than the Fed this week. And then let me give you my idea what the Federal Reserve is going to do and our game plan going into the week. So let's get to it. The first thing you see on here on headlines is how the Fed's escalating in the fight against inflation is hitting the hot housing market. But the first thing I want to go over with you guys, like we always do, is the economic calendar. So Monday, there's nothing. Okay, today there's nothing. But tomorrow starts the whole week, and it's going to be an action-packed, I'll say 2 or 3 days. Why? This is our agenda for just the next 2 days. Okay, let's start at the top, the consumer confidence. It's down, and I think it's going to be even down worse than this. Why? Stock market's down all over the place. Cost of energy's out the roof. The pain at the pump is terrible. Food costs are crazy, and you now have the Federal Reserve coming out saying they're going to raise interest rates on everything. So consumer confidence at some point is going to fall off a cliff. The next thing, new home sales. Well, this is going to drop as well. Why? There's a ton of people pulling out of their contracts. When this says new home sales, it basically is new construction. Okay, there's thousands and thousands of people pulling out of their contracts because they just can't afford it anymore. All right, so that's basically tomorrow's news. And then Wednesday, here it starts. We start going through some things. Remember, the Federal Reserve is meeting. They're going to come out on Wednesday, right through here. And right here, they're going to come out and do a press conference. They're going to tell us exactly what their plans are to do. Well, we already know that based on this headline, the Federal Reserve is trying to fight inflation. And it's killing the housing market. Okay, so what's my thoughts on some of this? Well, I'm going to put it all in a bow here at the end, but based on the information we have right now, we don't have anything because there's no news out for Tuesday. We don't really have any information coming out for tomorrow that really should play any havoc on the market. So the big day this week is going to be Wednesday. So I'll post a live event when the Federal Reserve comes out and tells us what exactly they're going to do. But this week up until that point should be pretty slow. So based on just this information we have so far, what's going on with mortgage rates? So to find out that, what we do is we go over to the MBS market. This is basically how I keep my thumb on the pulse of what's going on with mortgage rates, because this is what's happening live with the price of a mortgage-backed security bond. It's a bond that trades on Wall Street. Its yield is the biggest component of the mortgage rate, okay? So this is what's happening to the price of the bond. So let me explain this to you. As this price goes down, rates go up. Okay, 16 is kind of a decent move, but I'm going to see, my expectations is this is about as high as it's going to, or low as it's going to get, and we should teeter around minus 20 and plus 10 maybe. So let me put it into context. Let's go over to this. Here's where mortgage rates are, all right? So this is a post issued by Mortgage News Daily, and they do it every day. What they do is they survey mortgage lenders all over the country with a scenario of this. If you had a client that had a 740 credit score, that was buying a $550,000 home, putting 20% down, what would your rate be? Well, this is what the banks sent back. This is the national average in regards to that scenario. Okay, so what I want to discuss here is just let me explain this cell right here, because you have the 6 most common loan programs right here. But let me explain this cell to you right here. This is saying the 30-year fixed rate now nationally is at 5.5%. It's down 19 basis points from the previous day. So on Thursday, this was 5.69. So today it's 5.59. You can see it's dramatically lower than the 52-week high. This gives us the 52-week high and low. You can see the low, we've basically doubled it. But the good news here is we're about 0.75% off the high. Okay, so the first thing that comes to mind when I see this is if you've already locked in your rate and you called your mortgage lender and said, hey, I noticed rates are down 0.5%, maybe it's 0.75%. What can you do for me? The response you're probably going to get is this. Can't do anything because you've already locked in. So does that mean you're stuck? No. What that means is you need to reach out to me, okay? I am a mortgage broker. I'm licensed all over the country and in Puerto Rico, meaning I can help you anywhere in the entire country. I'm a broker. I deal with over 100 different lenders. They're the largest lenders in the whole country. So what I need you to do is send me your loan estimate, and it'll tell me your value of your home, your loan amount. It'll give me all the numbers on your property in regards to the closing. It'll give me your rate and if it was locked in or not, and then how much it cost you for that rate. So by sending me the loan estimate, not only are you probably going to get a lower rate, you're probably going to get a heck of a lot lower fees. And I'll give you all my information. It'll be down at the bottom, and I'll also give it to you at the end of this video. So based on that, that's what we have. So if you'd like to find out more about me and my team, visit us at therateupdate.com. But what I said is I was going to wrap this up into a nice little bow for you to explain what I think is going to happen this week in regards to the Federal Reserve. So let's lay that out here briefly. Going into the Federal Reserve meeting on Wednesday, here's what my game plan is, and here's what I think they're going to do. They're going to come out and say, we're going to raise the rates, federal funds rate, 0.75%. Okay, it's going to be no shock to the system because everybody's anticipating that right now. If they do 100 basis points, which I am almost positive are not going to do, if they do 100, you're going to see exactly what happened last time. You're going to see the stock market plummet quickly, and you're going to see the bond market, the mortgage rate spike. Okay, but my anticipation is this. They're going to come out and raise the federal funds rate 0.75%, but then their future guidance, what is it? Because that's the biggest determination of what's the projection, what's the future looking like for mortgage rates and rates all over the board. Again, no matter if you're looking for a car loan, a boat loan, credit cards, furniture bills, everything, it's all going to tie to this. Okay, so the future guidance I'm expecting to read a little bit like this. Well, we've seen some indicators starting to pull back. We have lumber prices down about half of where they peaked out at. Okay, we see paint at the pump. Oil prices in June were peaked at $120 a barrel. We're at 95 now. That's a huge relief at the pump, basically where a lot of us are getting hit from. Rents continue to go up. Okay, so all this is playing a role into that. But what I expect the Federal Reserve to say is this. Our projection is, and they're going to say we're going to raise we plan on raising at the next meeting 75 basis points. Why? Is they're already setting up the market for that number. So if the numbers that they monitor in regards to inflation start to ease, they can come back into the market at their next meeting and say, okay, we're only going to do it 50 basis points. At that point, you're going to see everything rally. You're going to see the stock market rally. You're going to see mortgage rates come off of their peaks and everything else because what they're projecting to the economy and the markets is things are starting to cool down. Okay, so that's my expectations of what they're going to do. Okay, but it's all going to be predicated on news that comes out even up until the Federal Reserve meeting, the conclusion of their meeting on Wednesday. So on Wednesday, I'll have a live event to show you guys what's happening live, and I'll decipher it in kind of English for you because a lot of times they'll say numbers or they'll use terminology you might not understand. I'll put in more layman's term in context for you and let you know based on that information, then has it changed my mind on the future? Or has it maybe solidified what I thought was going to take place? So based on all this information, that is it for right now. So I hope you like my videos. I hope you find value in my content. If you do, please don't forget to give us a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert. God bless, guys, and thanks for watching. Bye-bye.